What a great time to be an investor here in India. The economy is moving in the right direction and everyone seems to have some stock in it. But it wasn't always the case. There was a time when stocks in India were in the hands of just a few. We have NSE to thank for the sea change in India's trading landscape. By launching the first ever trading platform, they made it accessible to anyone who had the will and skill to trade. The rest, as they say, is history. Today I get to explore that history as well as the future to come with the MD and CEO of the National Stock Exchange, Vikram Limaye. He spent 3 decades maneuvering the ins and outs of the financial world, from audit advisory to working on Wall Street to chairing government committees. He's really been there and done that. Vikram, thank you so much for joining us.
Thank you.
The percentage that Indian households invest in stock markets still is in single digits. It's still at just about 3%. You know, we talk a lot about what government can do to increase participation. What more can the exchange do, or in fact is trying to do as well to get that going?
So I think this is an area that the exchange is very much focused on, because we do believe a core part of our mandate is really expanding and deepening and broadening of capital markets. So in that construct, it's exceedingly important for us to see how more and more retail investors can get into markets. The 3% number that you've mentioned has actually grown quite substantially over the last few years. And that is evident even in the numbers that you see with the asset management industry, where people are investing more systematically through SIPs. And that has provided a cushion against volatility. And that is actually the result of a lot of hard work by multiple agencies, asset management companies, certainly the exchanges, the regulator, etc. Because investor education and investor awareness is the crux of it. You have to get more and more people comfortable with markets. They have to understand markets. Products have to be simple, and all of those things have to be worked on in order to get more retail participation into markets.
So what do you see that number growing to, let's say, in the next few years, 3 to 5 years?
You know, if you were to benchmark against emerging markets, right, you have in the emerging markets approximately 12 to 15% of household savings going into markets, and we're somewhere between 3 to 5%. So if 5% can go to 15%, you're really looking at tripling the participation in markets. That's the potential. If you look at the developed markets, then it's more in the range of 35 to 40%.
And you see that in 3 to 5 years, tripling possibility?
It's difficult to triple in 3 to 5 years, but I'm saying that, you know, there has been a steady increase and there's always an inflection point. And I think we are at that inflection point because you've seen a sizable change in terms of the inflows into the asset management industry. Part of it has to do with the demonetization, but even after that, I think people are systematically continuing with their SIP plans, which is a positive trend. And I think if more and more people try and invest systematically into the markets rather than trying to time the markets, I think that would be a good thing to do, because people will have a positive experience in markets. It's been proven that over a long period of time, the equity markets as an asset class have generated returns that are superior to any other asset class. But you have to be invested for the long term, and you have to try and invest in a systematic way rather than trying to time the market.
What about protecting investors as well? For example, the arbitrage between brokers and investors, that's something the exchange has always been focused about. Give us a little bit more insight into that and how it works.
So one point I would like to make is that over the years, the markets are certainly a lot better regulated, okay? And the risk management systems, the regulatory mechanisms in order to protect the common man have evolved quite significantly. And so from that perspective, I think investors should be a lot more comfortable investing in markets today than they were 15 years ago. And I think from a regulatory perspective as well, if you look at the oversight on brokers, and the point that you made, the disputes that arise between brokers and investors, the NSE certainly plays a very important role in trying to first educate investors, to try and handhold them through any dispute process, and then you have an arbitration process. If disputes cannot be resolved between the investor and the broker, then you have a formal arbitration process through which investors will get justice, because then you have a common arbitrator who decides on the case. And if there is money to be paid to the investor, then we have an investor protection fund as well, through which money gets paid to the investor. But as it relates to the oversight on brokers, that's also very strict in terms of making sure that daily statements are sent to the investors in terms of what trades have happened. The exchange also sends daily SMSs to investors in terms of what trades have happened. The broker is supposed to send that, and the broker is supposed to settle all the accounts within a certain time frame. And there are very strict compliance norms that are enforced by the exchanges on the brokers.
Now, you're the best person to ask, and you touched upon SIPs earlier. But what are some of the options that first-time investors have? Which are the instruments they should look at when trying to enter markets for the first time?
First, an investor has to really invest in markets once he's gained some knowledge about the market. So I would say that investors should first try and understand what their risk appetite is, should understand what their risk capital is, should try and gain some understanding of the various products that are available in the market, and then begin the investment process. And I don't think that's that hard to do, because now you have various products that are quite simple to understand. For instance, the exchange traded products are quite simple to understand. If you want to take a call on just the overall direction of the market, you have a market linked exchange traded product, which is also very cost efficient, and you don't have to take specific calls on individual stocks. So you don't have to decide on whether you want to invest in stock A versus stock B, because that really requires a more detailed understanding of the company, the sector, government policy surrounding that sector, etc. If you just buy an exchange traded fund that is a reflection of where the market is, then you're not really taking a stock specific call, you're just taking a market call. So there are various simple products that are available to investors today, but the investors should take the effort to try and understand and to learn about markets before they start investing.
In the past 2 years, we've seen an increase in the number of IPOs and also an increasing appetite for them. Do you see more IPOs? And also, again, it can be a risky process. So how would you encourage new investors to both look at it seriously but still be aware of the risks?
So the IPOs are really, if you look at what the exchange does in an IPO, we're obviously making sure that the right kind of companies list. So there's a very strict process surrounding what type of companies are able to list. There are criteria in terms of net worth, profitability, governance standards, etc. And then the prospectus goes through a fairly rigorous process of the exchange reviewing it and then the SEBI reviewing it. That's as far as the main board is concerned. We have also started a new platform for emerging companies, SME companies, and also emerging technology companies. And that is called NSE Emerge. And that is done very well. We have more than 150 companies that are listed on NSE Emerge. That is a simpler process, and therefore it facilitates younger companies to list on the exchange and provides a further diversification of opportunities for investors to invest not only in mature companies but also growth companies. And there again, the exchange follows a very strict process of figuring out which companies are eligible to list, and the exchange actually vets the prospectus. It doesn't go to SEBI. It's left to the exchange in terms of which type of companies list. So we are actually holding companies to a fairly high standard in terms of the quality of companies that list. Beyond that, which companies the investor should invest in is really a function of, as I said, the investor has to understand what he's investing in. He has to understand what his risk capital is and what his risk appetite is, and then accordingly take a call.
Just while we have you, and we can ignore this question if you want, but you've always been very progressive thinking, and there's been so much talk around blockchain and AI and so forth. How do you see the market evolving and adapting to some of these newer concepts?
I think, we're doing our bit in terms of trying to experiment with new technologies, including blockchain. So we've actually got a couple of areas where we've already started experimenting with blockchain. I think it is a trend that you cannot ignore. I don't think it will be as disruptive immediately as people expect it to be, but over time I do believe that there is application for the blockchain technology in various areas, and we are doing our bit in terms of making sure that we stay ahead of the curve. We're also working with the regulator, and the regulator is also very progressive in terms of making sure that people are using new and emerging technologies wherever they can, in terms of making sure that the markets are more effective and efficient.
Vikram, thank you so much for joining us.
Thanks a lot.
And as you can understand, from some of what we've heard today, the deepening and broadening and greater participation in Indian stock markets is truly going to be an integral part of India's growth story going forward. That's all from us for now. Thanks for watching.
समझकर इन्वेस्ट कर. Issued in the public interest by NSE.